Hi everyone. This is our first live session that we've done on this group. It's normally a freedom hub, so it's about talking about financial freedom, but we're in some very, very unusual times right now. So we're talking about the stimulus package today. A lot of you are probably wondering what the hell's happened to the world over the last 2 or 3 weeks. But before I started, I just wanted to thank you for being here. If you'll watch the video afterwards, then thank you for the time. I realize that everybody is very, very busy right now. And many of you are also on the front line. So I want to thank you first of all for all the work that you are doing, and know that we are thankful and grateful as a nation for all the work that you are doing, because you are putting your own health at risk for the benefit of others, and that says something in itself, especially when we're dealing with something as we are right now. So I wanted to thank you for that. The reason I did a live thing today was because the stimulus package has come out. A lot of people are talking about it. A lot of confusion out there as to what it means. Some people think they're going to get money in their bank account. Some people think it's going to be 100,000. Some people think it's going to be 20,000. Some people don't really have any idea. Many people think they're going to get money in their bank account. Some people know it's credit. So there's a lot of confusion out there as to what you can and can't get and what is really available. So what I thought I'd do is I'll spend some time today going through what it really means. So there's two parts. One is a government stimulus, and then there's an ATO part as well, which is an ATO assistance part. But the one that's got everyone talking, and the one that I have spent an awful lot of time on talking to my clients, because depending on how you're set up, it's going to make a big difference as to whether you get the stimulus or not, and how much you get. So that's the pay-as-you-go withholding assistance. And so what does that really mean? What the government is saying is, we want you, or as a business, to ensure you keep employing employees. So what we're going to do is we're going to give you an incentive to ensure you keep them employed. I think there's a flaw in what they're trying to do, but if we just look at what they're doing, then what they're saying is whatever tax that you deduct from them for the next, for a period of 6 months, they're going to give you back that amount of money as a credit for the period 1 January 2020 to the 30th of June 2020. And that's for all your employees, including yourself if you pay yourself as a salary. So it's 100%. And then on top of that, they're going to give you something called a boost payment, which is another amount. So the minimum is 20,000 and the maximum is 100,000. And you just need even one person on your payroll and you'll be entitled to the stimulus. So what I thought I'd do is I'll go through a couple of examples so that you get an idea of what it means. So if we take a small medical practice, they might have over the 1st of January to 30th of June, they've got salaries which they've paid out $30,000. They've deducted tax from their employees of $5,000. So what that means is you as a medical practice will have paid them a net salary of $25,000. You still got to do that. And you got to remember, you still have to pay the superannuation on top. So you've got to pay another $2,850, which means your outgoing right now is $27,850 for that 6-month period. Then what happens is you lodge your BAS, and the tax office looks at your BAS and it says this medical practice has deducted $5,000 of pay as you go. Now, what they'll say is they'll give you 100% of that, but because the minimum for that first period is $10,000, they will give you a credit of $10,000 on your BAS. Now you can use that to knock it off against other ATO debts, like you'll have a GST debt, so you can knock that off against that. Or if you don't have any GST, so for example, I've got some medical clients who are GP contractors, and they might just employ their wife for a small period of time, and they won't have any GST because their work is GST free, so they will get a refund of the difference between the amount of tax that they've deducted and the 10,000, assuming the tax is less than 10,000. So that's what will happen. So when will you get the payment is the next question. So the first 10,000 you will get on the 28th of October 2020. Then on the 28th of July, you'll get another 5,000. And then on the 28th of October, you'll get another 5,000, giving you the 20,000. So that's an example of someone who's a smallest practice. If you then go on to something that's a bit larger, and let's say in the March quarter they paid $60,000 in wages, they've got $15,000 deducted as tax. They've now gone into a bit of a downward spiral because there's not so many people coming into the practice. They've released employees, there's less people working, so now they've only paid $10,000 out for the next quarter, and their tax that they've deducted is now only $2,000. So what we've got is we've got tax deducted of $15,000 in the first quarter and $2,000 in the second quarter. So the March was $15,000, the June was only $2,000. $17,000 is what you have actually paid out to the tax office. You've still paid your employee. So $60,000 in the first quarter, $10,000 in the second quarter means $70,000 you have paid. Then you take the tax off, which was the 15 and the 2, giving you a net payment to your employees of 53,000. You must add the superannuation on top, which is 6650, and that comes to a net payment that you will pay to your employees of 59,650. You still got to do that. You will lodge your BAS, and in your March BAS, you will lodge it, and it will say 15,000. Okay. And what will happen is they will make a payment for you of that amount, okay, because it's the minimum of 10 and a maximum of 25, okay, so they will pay you the 10,000, okay, and then the remainder will come again in the same way. So they'll pay the 15 straight away because that's what is due, and then in the June quarter, they'll reduce the amount and they'll still pay you. But overall, you will get paid something in the region of $34,000. So the way it will work is in April, you'll get your 15. Then in July, you'll get about 10.5. And then at the end, you'll get something like about $8,500, $9,000. In all, you will end up getting back $34,000, so you'll double up with the boost payment. Now, if you've got a very large organization where they're taking out and they're doing their pay-as-you-go every month, so these are for my larger medical practices, they're lodging their BAS every month. So what you do is you look at the March period and see what you've deducted. You multiply that by 3. Okay, so let's say, for example, they deducted $10,000 as pay-as-you-go in the March. You multiply that by 3 and that comes to 30. Now the minimum is 50, so you get the 30 straight away. Okay, and then in April and May, let's say, for example, you did the same amount, 10,000. They will pay you 10,000 every month, up to a maximum of 50. As soon as it hits 50, then it stops. And then in the October period, you'll get the boost payment of effectively the 50,000 again. So you end up getting 100,000. Now, here's the key, especially for medical practitioners, because a lot of you get paid under personal services income, which means you don't necessarily take out a salary. Now, what it means is, and I've got quite a few clients like that, where we tax them under PSI because that's how they're taxed, and they don't necessarily take out a salary. If you don't take out a salary, or you don't have anyone you're paying as a salary, you will get no incentive, zero, zilch. So what you've got to do is you've got to re-engineer how you do it. Now, you've got to be careful because there is anti-avoidance legislation that's put in place so that people don't manipulate the incentive. But the way that we have looked at this is the objective is to pay yourself. So you're paying yourself whether it's through a distribution or PSI or whether it's through salary. So that's not a problem. You've only changed it in order to get a tax benefit. And the tax office has openly said that is, there's nothing wrong with doing that. So what we do is we've converted a lot of our guys from PSI to salary. Now, you have to be registered for PSI at the 12th of March. So if you now go back to your accountant and say, well, I want you to register me for pay as you go, you're not going to get the incentive. When we set up all our clients, we always set them up with pay as you go registered just in case. So a lot of our clients will get, we can change them and flick them over and get them paid. But if you're a medical practitioner, you're getting paid under PSI, get in touch with your accountant or get in touch with us and say, how can I maximize my incentive? Because this is really, really important. We've spent a lot of time last week talking to a lot of our doctors and medical professionals saying, how do we get the maximum out of here? So please have a discussion with that. So that's how the pay-as-you-go withholding incentive works. The other part of it is called the instant asset write-off. So a lot of you will know that if you buy equipment or you buy assets less than 30,000, they were a tax deduction. The whole amount was a tax deduction, and you didn't have to charge any kind of depreciation for it. So what they did was they said, well, okay, what we're going to do is it's not 30,000 now, it's 150,000. So you can buy any asset up to 0 to 150,000, and it's an immediate tax write-off up till the 30th of June. After 30th of June, what they've said is the amount that stays is 150,000, but we're not going to give you 100% tax deduction, we're going to give you 50. So let's say, for example, you buy some IT equipment, you've got an IT project going on, it's $50,000, you pay for it today, you'll get an instant write-off of $50,000. If you pay for it on the 1st of July, and it's still $50,000, you'll get 50% of that, which is $25,000 instant write-off against your taxes, and the remaining $25,000 you might have to write off over, say, 4 or 5 years. Okay? Now, a lot of my medical guys have come back and said, does that mean I can change my car? And the answer is, we're not sure, and we don't know. We've tried to find out, because cars have what's called the luxury car tax limit, which is roughly about $60,000. So what the government at that time was saying was, you can spend up to $60,000, you can get a depreciation and a write-off for it, but anything above $60,000 we're not going to give you depreciation or a write-off for. We are still trying to find out from the tax office whether the 150,000 is a full 150,000 for cars. So please do not go out and buy an expensive car right now until you find out the rules, unless you really need to. At this moment in time, we're telling all our clients to preserve cash, so no major expenses unless you really, really need to. But it's something there for you. Okay, that is predominantly what the stimulus package was. There was one other part which was connected to banks, and it's predominantly for working capital. So the government actually realizes there's a lot of viable businesses out there. There's a lot of businesses that make money, but they are going to be under a very, very short-term, massive squeeze. When I mean short-term, 6 months, 1 year, 1.5 years, maybe 2. So what the government did was they went to the banks and said, look, we want you to give loans to these viable businesses, even though they're not viable right now. Give the loan out, maximum 250,000, and we will guarantee you this unsecured loan of 50%. So what's basically happening is you go to the bank and say, I've got short-term funding requirements, I need some money, I don't have any assets to back it up, I need an unsecured loan. They will give you an unsecured loan because they know 50% of that is backed up by the government. The interest rate's also quite low, so if you're under some severe cash flow issues, that is something that you may wish to use. Please note, whatever you take out as a loan is maximum repayable within 3 years. So if you go out and take out a $250,000 loan, you've got to have a pretty good, robust cash flow plan to make sure you can pay that back within 3 years. So that's mostly the government package. Then I'm going to talk about what we call the ATO package, because there's part of an ATO payment plan system as well. So at the moment in time, they haven't really advertised it, but they are giving at the moment 6 months payment terms. So basically their holidays, if you push it, they'll give you 6 months. There is at the moment no interest being charged on that. And normally the tax office charges quite punitive rates of interest. It's about 8%. It's not great. So they're basically saying, look, we might not even charge you interest on it. They've certainly turned around and said we're going to cancel all penalties. So if you've got late lodgement penalties or anything like that, they have said that they will cancel those. So if you've got any debt outstanding, and I've got a couple who haven't paid their BAS for, say, December, you can go to the tax office and say, hey, look, there's no chance we can pay this. Can you give us a deferral? They will defer it for at least 6 months. And that means in 6 months' time, you can then enter into a payment plan to start paying them. So worth taking the advantage of 6 months interest-free. It's basically a loan. Take it. They're also giving out, so if you've got debt right now, you think you've got income in and you'd like to pay it off now in installments or in payment plan, then they're giving you very low interest rate payment plans. So again, worth doing if that's something that you want to do. Okay. Now, one of the things that a lot of accountants are actually telling people is to change from quarterly accounting to monthly accounting for BAS, and if you've got refunds, especially in the medical field, because again, if you've got contractors who are getting charged GST for service fees or management fees, they're going to end up with refunds every quarter. So what they're saying is, if you lodge your BAS in earlier every month, then the refund comes in every month as opposed to waiting 3 months. Sounds great in principle. In theory, in theory it sounds great. In reality, it's quite different, because it now means you've got to lodge 12 BASs. You've got to do this every month. You're probably going to get your accountant to do it. Who's going to charge you? So weigh it up whether it's worth it or not. We're telling most of our clients, look, if you can survive the 3 months without having to do monthly BAS, please do, because it's a bit of a pain. But it's there for you if you want. The other thing is pay-as-you-go installments. Most medical practitioners will pay their taxes in quarterly installments and when they do their tax return to make up the balance. So the tax office has quite come back and said, look, there's a whole bunch of pay-as-you-go payments that need to be done at the end of April, 28th of April. They have turned around and said, we can vary that. Now, they are very specific. They're not cancelling it. You have to tell your advisor to go in and vary them to 0. We're going to do it pretty much automatically for most of our clients, to vary it down to 0, which means you will have no tax payment to make on the 28th of April. The tax doesn't go away, but you just don't have to pay it right now. They've then come back and said to us, they've said, look, we know that there's taxpayers who need assistance. So therefore, if you've made a pay-as-you-go installment in the September 2019 quarter and the December 2019 quarter, you can ask for a refund of that to get your cash flow going. Okay? Please, 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 please be wary of that, because the tax, as I said before, the tax does not go away. All they're doing is they're saying, we're giving you this amount back so that it can keep you going if you really, really need it. But when you do your taxes and you end up with a whopping great big tax bill, we are going to want that tax at some stage. So one of the things that I always tell you is, if you're behind in tax, trying to keep up and keep going is really, really hard. So don't fall behind. I'm suggesting if you take it out, keep it as a buffer and keep it aside. And if you really, really, really need it, then use it, but otherwise don't use it. Okay? Because the tax is still going to come back at some stage. It's only going to help you if your income for the next 3 months is going to be totally collapse and be decimated, and you end up with nothing, and all that tax you've paid, you're going to get some of that back. But until you've done the calculation, don't use it. What we will be doing, if any of our clients do use that, is in the early part of July, August and September, we're going to be recalculating their tax and then telling them exactly what they need to pay so that they don't get caught out. So just bear that in mind. Okay, finally, 2 other points. One is the state. So if you've got a business and you're paying payroll tax, you only pay payroll tax if you've got a fairly large payroll bill. So this is only really for much of my larger medical practices. So what the state government has turned around and said is there's a payment holiday for January, February and March payroll tax. You do not have to pay it for 6 months. And if you paid payroll tax in November and December last year, you can ask for that to be refunded. Now, again, it's something that they're giving back to you. It does not necessarily mean that you won't have to pay them. You're going to have to do some calculations to see if that works out for you. The final one is superannuation. So this is a real hardship incentive. So what the government is saying is we will allow you to access your superannuation fund. I've not really seen this in operation before. Previously, to claim hardship to get superannuation is really hard. So I'm not sure how this particular process is going to work practically. But what I will say is that they have offered it. So it's $10,000 for the current tax year, 2020, and $10,000 for the next tax year. You do have to be unemployed, claiming benefit, and you have to prove that your income has gone down, I think, down to about 20%. So there are still some rules attached to it. I'm not sure what the process is going to be. We're telling all our clients to avoid taking money out of a superannuation fund unless absolutely desperate. And we say this for two reasons. Your superannuation fund is basically your investment pot. Especially if you're young, taking out $20,000 now and using it, you're going to only get $20,000 in value. If you keep it in your super fund and it grows over many years, 20, 30, 40,000 years, 20, 30 years, then that value of that 20,000 is going to be significantly higher because of what we call compounding. So that 20,000 will be worth possibly 100,000 in a number of years' time. So we're really saying don't do it unless you really need to. So that is the summary of what I think is going to happen. My view is whatever incentives are out there, you take advantage of it and you try and get as much as you can. If you have not already spoken to your advisor, then please do. If you wish to speak to us, then please do. You can leave the comments underneath here. You can get in touch with us at any time and we will get back to you. If there's any questions, I'm happy to answer them now. If not, you can always get in touch with us later on and we'll be glad to help you. In the meantime, thank you for listening. Thank you for spending the time. I know you are all busy. I know many of you are on the front line as well. Please be safe, please be careful and look after everyone you love. Thank you. Have a great day. So if there is anything, then I'm happy to answer them.